Welcome to today's edition of the Statler Financial Radio Show. Your financial security is our business. Have a question for the team? Call today, 863-877-1188. That's 863-877-1188.
Welcome to the Statler Financial Radio Show with founder and president of Statler Financial Services, Philip Statler. I'm Stephanie Griffin. Philip is based in Sebring and has over 2 decades of experience in the financial industry. Philip helps to manage and grow wealth. So if you'd like to talk to him about turning your savings into a plan, give Statler Financial a call at 863-877-1188. And you can also talk to Philip about his core retirement design, which is a tailored planning approach designed to help retirees build confidence and manage risk in retirement. 863-877-1188. Hello, Philip. How are you today?
Hey, I'm doing well, Stephanie. Good to be here. It is, I'm glad that this is tax season's over. Let's just put it that way, right? So,
what a relief.
So finally, I get a little bit of a break here. So that's done and over with. And so now I can take a couple deep breaths and refocus on the financial planning side.
About time for vacation now, hopefully.
It got a few weeks before that happens.
Oh, well, it's coming up though. That's good. Let's do something a little different. The 5 strategic steps to help elevate your retirement savings. I want to know what these steps are. Retirement isn't just about stepping away from work. It's also about keeping the life you love and planning for a confident future. Today, we are joined by Philip Statler to share 5 savvy strategies to help retirement savings work harder. Philip, where should we begin on this?
I don't know, but if you say that fast about 4 or 5 times, that would be impressive.
That's a tongue twister. It really is.
I think, Stephanie, if we look at things, really the first step is to make the most out of your tax advantaged accounts. So things like your 401k or your IRAs. These accounts help you save efficiently by lowering your tax burden. And if you're over 50, then you get some catch-up contributions that can help you really add even more and grow your savings faster.
That's a great starting point, Philip. Now, what is the next step?
Well, I think that step 2 is to really rethink how you're spending now. Let's take a closer look at where your money's going and see if there's some room to shift some of it into retirement accounts instead of spending it.
Right.
The other thing I would say is, pay down debt, right? Let's get debt paid down. Every little move adds up over time. And we want to take that opportunity to make sure that we're fine tuning and putting away as much as we can as we're getting ready to head into retirement.
Right. Kind of baby steps, I guess, right?
Yeah, exactly.
Every little move. All right. Well, that's a simple way to keep building your savings. What about timing when it comes to work?
Well, I think that, step 3 would be this. Consider working a little longer. I'll tell you that this is probably one of the issues that we talk about a lot here at Statler Financial. I've got clients that they'll come in at 60. They'll say, hey, look, I think I want to retire at 62. I can start drawing my Social Security. And you can, absolutely can. However, that may not be the best for you or your family. And there's a couple of reasons why, Stephanie, because if you look at retiring at 62, you're not Medicare age yet.
Right.
So now we've got to plug a hole for 3 years. We've got to plug the health insurance gap. And a lot of folks, when they go and price out their health insurance and what that's going to cost them, they decide it's better to work another 2 or 3 years and get closer to 65.
Mm-hmm.
That way, Medicare kind of takes over that role. But I mean, just the pure fact that Social Security, you can take it anytime after 62. But remember, if you take it before 67, you're taking a big haircut.
Right.
I mean, a big haircut. and that haircut's going to last you the rest of your life. And if you wait longer to 68, 69, or 70, then you're going to get a raise, 8% raise for every year that you wait past 67. So I think it's important that you really play that out and look to see when is the best time for you in your current circumstances to take Social Security. It shouldn't just be a given at 62 or given at 65. I think you have to weigh those things out and actually put together a plan to see what's going to work best for you.
You are listening to the Statler Financial Radio Show with founder and president of Statler Financial Services, Philip Statler. You can give Philip a call if you would like a tailored financial guidance. He will help you do that. 863-877-1188. That's 863-877-1188. Today we are talking about strategic steps to help elevate your retirement savings. Philip, what is that fourth tip anyway?
Well, I think the fourth tip is really about putting extra income to work. If you get a bonus, you get a raise, or even if you get a tax refund, don't just spend it. Use it to boost your retirement savings instead. It's all about being intentional with your money and making sure that it is going to work for you. And that way you're better prepared for the time you decide, okay, I'm ready to retire. Let's do it now. I've got enough saved. I've got a plan in place, and let's go ahead and do it. But you got to be intentional about where your money's going.
Right. That's the second time you've said that. Now, I know there's a lot of people out there. It's hard to be intentional with your money. What advice do you have for people who it's so easy for them to spend money like it's going out of style? What would you tell them?
It is easy. And that's the problem, right? And we all have that, I
Sure.
think, for the most part. I mean, there's some very, very frugal people, but I'm not one of them, right? So I have to be very intentional about money. And so I have a plan. Here's some things I want to accomplish. I use I use a bank that lets me build buckets of money in my savings account. I love it. I can put, hey, look, if I want to buy a new vehicle, I got a bucket for my new vehicle.
Right.
I'm looking at maybe, I've got a real old golf cart and I really want to upgrade it. So I've got a bucket for my golf cart. And so I think that's intentionality and then I have a general account and obviously I got my retirement account. So I think it's being intentional about those things. And that way, here's what I'm putting money away for.
Right.
And anything above that just goes towards my retirement accounts.
Well, if you would like to become intentional with your money as well, definitely give Philip Statler a call and talk to him about how you can turn your big cash savings or your savings that you have for retirement into a plan. He will help you do that. Give him a call at 863-877-1188. That's 863-877-1188. Yeah, what a great habit to start. And what is that final step today, Philip?
So I'm going to say the final step before I got a couple extras I want to throw in for just good measure.
Sure.
Is that you want to keep an eye on your investment fees, because high fees can eat away at your savings over time. Take the time to check where your money is invested. Look for ways to help reduce unnecessary costs. I know that lately I've talked to several folks that use one of the big name national brand investment management firms, and looking at their fees was really surprising to me when I started really calculating. Folks were paying a lot more than I anticipated this firm charging. But and let's face it, this firm only deals with people that have $500,000 to $1 million or more in investable assets. They don't deal with anybody little. So I was really surprised when I saw their fee schedule and how much they were charging. But everything that you're paying in fees is less money you're making overall. So keep that in mind as we look at getting ready for retirement. One other thing I want to mention, and I mentioned a little earlier, is that we want to do our best to head into retirement with as little to no debt as possible. That is huge. I have seen folks retire, and other than a mortgage, they still have a bunch of credit card debt, automobile debt, and it chokes them. It really diminishes their retirement because they either have to take way too much money out of their retirement accounts and pay that stuff off, and they don't have enough to live off the cash flow, or two, they're having to take extra out every month to make those payments. Please do your best. Try really, really hard. Make it a goal to retire debt-free as much as we can, debt-free. If not a mortgage, but let's not have any credit card debt as we head into retirement. It is a big anchor,
right?
And it will drag you down as you head into it. But that's kind of one of the final things I wanted to throw out there, Stephanie.
So people with, let's say you don't have any debt, but you do have the mortgage still, and you have a little bit of money. Do you pay that mortgage off when you go into retirement? What's your advice there?
So it really depends upon what the interest rate is on that mortgage.
Right.
If you're fortunate and you've got one of those 3% mortgages, I'd never pay it off.
Right. Just keep making the payments.
I just keep making the payment because you should be able to make more than 3% on your investments over time. So hopefully, though, your mortgage is pretty close to being paid off.
Right. I would think by retirement, for most people at least.
You'd be surprised, Stephanie. You'd be surprised how many people go into retirement with a mortgage.
Is there any other final advice before we move to our next segment?
I think that hopefully these steps will help you make some savvy decisions so that you can have that retirement that you've always dreamed of. And it's really a process. And if you're looking for guidance, listen, our team here at Statler Financial, we're here to help you create a plan that works for your goals. And I've said it a lot. If you listen on the show, folks, you need to have some kind of plan. Less than 30% of the folks out there listening right now have any kind of retirement plan at all. Folks, don't let that be one of you. It's a simple phone call to get that process started. And it's something that you need to have. You need to have a retirement income plan in place so that you know where your money's coming from, how long it's going to last. Do you need to tweak something? Do you need to make changes before you retire? Don't go into retirement without a plan. And if you've recently retired, or if you've been retired for, I'm going to say, the 5 years before and the 5 years after retirement are vitally important. You need to make sure that you've planned everything out during that process. It's easy to get started. All you have to do is call my office at 863-877-1188. That's 863-877-1188. I'd love to spend 30 minutes with you to make sure that you're on the right path to the retirement you always dreamed of.
All right, Philip Statler from Statler Financial Services. A lot of great information to start off the show today. And the Statler Financial Radio Show will be right back. Turn your plans of yesterday into yes today. Don't wait another day for a routine checkup of your retirement plans. Call Statler Financial Services, 863-285-3815. That's 863-285-3815.
Many people don't plan for long-term care until they have to. But long-term care isn't just nursing homes. It can include in-home care, assisted living, or ongoing support over time, and those costs often aren't covered by Medicare. That's why Statler Financial Services helps clients plan ahead, looking at how long-term care fits into a broader retirement strategy. Planning ahead is not about expecting the worst. It's about understanding your options. Call Philip Statler at Statler Financial Services today at 863-877-1188. Philip and his team offer guidance to clarify your choices and cost before you need to act, no matter what life brings. Now is the time to learn more. Call Statler Financial at 863-877-1188, or you can text VISIT to 863-877-1188.
Advisory services offered through Second Half Financial Partners, LLC, a SEC registered investment advisor.
Welcome back to the Statler Financial Radio Show with founder and president of Statler Financial Services, Philip Statler. He is with us today. Give Philip a call if you have questions about anything retirement. 863-877-1188. That's 863-877-1188. And you can also text the word visit to that same number. And Statler Financial will get you set up with a visit to talk with Philip and his team. It's a free consultation with them, and they'll see how things are looking for you, for your future retirement, or maybe you're already in retirement. Let's talk about something that keeps a lot of people awake at night. Your parents or grandparents retired with a pension, guaranteed check every single month, which would be wonderful these days. The company handled the investing, managing the risk, and your folks just cashed the check. That world is gone for most Americans. So, Philip, here is my question. If the pension disappeared, and I think we probably all know the answer to this, but what exactly replaced it, and is it enough?
Well, the 401k, as a simple answer, is what replaced it. Let's remember a few things here, Stephanie, is that pensions were, just like you said, that was the employer's responsibility for the entire burden. I mean, they're the ones that put the money away. They had to invest it. They had to oversee it all. They had to run the calculations on how much everybody got paid. All of that came under their umbrella because that was your retirement income. That was part of your compensation, was that retirement plan. In today's world, 401ks equal a responsibility shift from the employer to now the employee. They are now responsible for what gets saved and how much gets saved and how that works in terms of income. Now, a 401k is a powerful savings vehicle. Don't get me wrong, but it was never designed to be a pension. It just wasn't. Savings and creating lifetime income are two very, very different skills. And remember, if you listen to us much at all, we talk about the three-legged stool, who now has collapsed into a two-legged stool. Well, remember that three-legged stool was a pension, Social Security, and then your personal savings. So basically, you needed a third of your income. You were basically responsible for a third of your income. That is now collapsed into the two-legged stool, Social Security and your savings. Obviously, the 401k is part of your savings, but still, that now has to be turned into a pension of your own. So there's more onus now on the employee to take care of themselves.
That's really a powerful distinction, Philip, saving versus creating income. So someone retires with, let's say, just, $1 million in their 401k. That does sound like a lot of money, but you're saying that number on the statement can be deceiving. Why is that?
Well, because that number may be what the number is today. It may not be what the number is at the end of the year, right? It can change. It could be up. It could be down. That lump sum is kind of abstract because of the volatility that's in the marketplace. It's going to be up and down. And that volatility, it can create some paralysis. And here's what I mean by that is that we freeze up. Right? If it's down, if it's up, well, then you're a little bit more loose with your money. Oh, I can take that trip. I can buy that new car. But when the market is down, it's, well, maybe I won't do the golf membership this year, or maybe we won't take that big trip that we wanted to take. So it starts to paralyze folks. Listen, you've spent 30 years learning how to accumulate wealth. And a lot of folks have done it really well, but there's a distinction, and that distinction requires a completely different playbook when it comes to distributions. Right. Distributions are just different, and you need a different playbook to compensate for that, Stephanie.
Well, the fear really isn't irrational because people are living so much longer now.
They are. That's true. And just to kind of, back that up, there's been some studies, and there's some, the statistical guys, they like to run their numbers. but if a married couple, there's almost a 60% chance that at least one spouse of that couple, if they're age 62, we used to run it from 65. Now they've gone to 62, will reach the age of 90.
Wow.
I mean, that's huge. I mean, longevity is a blessing. but every extra year stretches that lump sum thinner and thinner, and so that becomes a concern. And then on top of that, you've got healthcare costs escalating dramatically in the later years. Not so much maybe in your 60s, but mid 70s to mid 80s, you start to have more and more little things go wrong. So the question isn't just, do I have enough? Is, can I make it last long enough to get me through life?
Right. Yeah. A lot of
And to
people.
get
Go ahead.
and to get my spouse through life, right? I mean, it's not just me; it's me and my spouse. Can I get them through life? And Stephanie, that's really when I think about it. Several years ago, when I sat down and really started looking at how can we help folks,
Mhm.
it made me put together this what we call our core retirement design, where we help people design that retirement they always dreamed of. It's a simple phone call, but we look at risk, we look at taxes, and we look at income. Those are the three key points that retirees have when it comes to making sure and being comfortable in their retirement. To get started, it's simple. Give us a call at 863-877-1188. That's 863-877-1188.
You are listening to the Statler Financial Radio Show with founder and president Philip Statler. He's with us right now. So for someone listening to this who feels that knot in their stomach right now, who realizes they may have a big number on a statement, but no real income strategy, how do you help people work through this?
Well, that's a good question. And it's part of our process because we need to have an income plan. And that's really what it is. It's taking somebody where they are and putting together that income plan. Here's where your sources of income are going to come from. What's your Social Security going to be at 62, at 67, at 70? When should you take it? When's going to be the best time? And there's no right answer. There's no one answer fits everybody. Everybody's different. And so really, Stephanie, you have to work through the process. It's not a simple, grab a number out of the sky and say, here's what it is. It's working through the whole process. And it is a process, and it does take some time and some energy. And some people don't always like the answers they get when we're done. And that's, I don't try to sugarcoat it. I want people to know exactly where they are and what they need to do to make sure that they can have that retirement they have always dreamed of.
And I love that about you. You don't sugarcoat it. You get to the point and you help folks out. Go in and talk to Philip and his team at Statler Financial by calling him at 863-877-1188. That number again is 863-877-1188. What about someone who's already has an advisor but isn't sure they have this kind of structured income plan in place? What is the value of getting a second opinion?
Well, it is valuable because then you know what the plan is. And I would just say that, if you're working with somebody and you don't have a written retirement income plan in place that you could pull up and look at, or we could sit down and look at today, then you may need to be looking at some different options. And so I think it never hurts to walk through the process to make sure that you're getting what you need, that you're getting enough income, that where you are is going to give you enough income, and that you don't need to, stop work now, get ready to retire now. What is your options? And that is especially the closer you get to retirement. If you're a year or two out from retirement and you've kind of set that date in your head, can you imagine if you get 6 months out and the market, it really takes a crash, and you figure out and you based everything on that big number?
So scary.
What does that do? And I remember the folks coming into some of the workshops I did back, in 2008, and they were in that boat. They had watched their savings dwindled in their 401k, and now they were like, what do I do? I've got to work a couple more years. I can't stop. And so I'm going to say, 3 to 5 years out is not too soon to start the process of making sure that you have everything lined up properly that the distributions are going to be there when you want them to come.
Can you tell us a little bit more about your core retirement design?
Absolutely. So we start with the premise that everybody needs to have diversification within their portfolio. And there's really two strategies when it comes to, or there's not two strategies, there's two types of diversification.
Right.
The first is we have to determine how much of your money should be safe and how much should be at risk. It's that simple. Risk money goes up and down, safe money doesn't. And so we have to make that distinction first. Then secondly, we take the risk part of the portfolio and make sure we build a diversified portfolio around that as well. So now we've got double diversification in there to help offset any risk that happens when the market comes. And we do that by really looking to see what is your risk number, how much risk do you have in your current portfolio, and where do we need that risk to be in retirement. Second is taxes. We want folks to pay the least amount of taxes possible. I personally use the Roth 401k as much as I can. That's where I put all of my contributions, is in the Roth, because I want to pay the least amount of taxes possible when it comes to retirement. And so a lot of folks don't have that option or have never used that option. And so we look at Roth conversions. What can we do? How does that work out? Because there's a lot of strategies there that work and help people. And Stephanie, unfortunately, people think they have to do an all or nothing deal.
Right.
And that's not the case. I have clients that do $10,000 or $15,000 a year. Is it, by the time they're retired, do we have it all done? No, but every little bit helps, right?
Definitely.
And then the third step is an income plan, making sure that we have a plan that your income is going to last as long as you need it to. It is that simple. We need to have one in place, and it's easy to get started. It's a 30-minute phone call. Give us a call at 863-877-1188, 863-877-1188, or you can go to our website at statlerfinancial.com, and there's a link there where you can schedule a 30-minute call.
All right. Yes. Give Philip and his team a call at 863-877-1188 or go to statlerfinancial.com. When we come back, we'll talk about a blueprint for helping turn that anxious lump sum into a structured, dependable retirement paycheck. The Statler Financial Radio Show will be right back.
Needing a second opinion on your retirement plan or to see if you're paying more than your fair share to Uncle Sam? Schedule your complimentary visit today. Text VISIT to 863-877-1188. That's VISIT to 863-877-1188.
The market goes up, it goes down, but retirement keeps going. And when you're close to retirement, those swings can feel very different. At Statler Financial Services, our planning focuses on helping plans stay aligned through market movement, so short-term volatility doesn't disrupt your long-term plans. It's about balance, income planning, and staying disciplined through changing markets. Call or text VISIT to 863-877-1188 now for your free risk analysis from Philip Statler at Statler Financial Services. If you're nearing retirement or already there, now's the time to review your strategy. Take the first step. Get your questions answered before the next market volatility takes a chunk out of your portfolio. Call or text VISIT to 863-877-1188. That's VISIT to 863-877-1188. Advisory services offered through Second Half Financial Partners, LLC, a SEC registered investment advisor.
Welcome back to the Statler Financial Radio Show with President and Founder Philip Statler. Philip focuses on building secure, complete retirement plans. Schedule your free visit with Philip and his team by calling 863-877-1188. That's 863-877-1188. Before the break, we painted a pretty sobering picture. The pension is gone. The 401k alone isn't a plan. So, Philip, let's talk solutions.
All right. So, you think that what do we need to do to kind of create that income plan? Well, we have to start with the foundation of retirement income. And so we look at what is that foundation? Well, the foundation is income that we know is consistently going to come in. And so we look at things like, well, Social Security. And it makes when we take Social Security so much more important than it ever has been. And so we want to look at that too, as when do we start taking our Social Security? And then we look at things like, consider, kind of separating your expenses into must-haves. These are things I've got to have in retirement. I've got to pay for no matter what. And then this is what I'd like to have, bucket. And that way, if for some reason things slow down or we have to cut our income back, then now we've got two sets of expenses to kind of look at there. Now, this separation really does help us plan, but because now we have a completely different income strategy or investment strategy that handles those two different types of expenses, Stephanie.
Now, I like to have bucket. That's probably my favorite bucket.
I bet it is. Don't we all?
All right. So once you know that number, the bare minimum you need every month just to survive, what do you do with it?
Well, then can you make sure that income shows up no matter what the stock market's doing, no matter what happens to the marketplace? And so what do? We build what we call an income floor. It's a foundation of predictable income sources for the must-have expenses. It's going to cover the things that we have to pay every month, no matter what happens. And then part of it is we're going to optimize Social Security. I mean, that's really a cornerstone of income planning, is when is the best time for you to take your Social Security? And that's part of our process to determine what that is. And if Social Security, and then if you have any pensions, don't cover the must-have number, well, then we got to fill the gap.
Right.
And so then we have to build, right? We have to build the plan that we've got to fill the gap from our savings, whether that's the 401k or whatever it is. We got to fill that gap. And that's what we work on. What is that gap? What do we have to fill? The goal, obviously, is your essential bills are paid by the sources that are protected from stock market volatility. I mean, that's the key, because then, hey, I've got that money coming in every month. I don't have to worry about it. Then the like to haves, it can come out of the other bucket of money that might have some volatility tied to it.
So can you discuss strategies for building other predictable income sources, which is appropriate for that income floor?
Well, I think first you focus on things like reducing fees,
Right.
taxes, rental income. For some might be an option, right? Because, I know I've got a couple of clients they're handy. They love to do that. They get in there and work on their places and that kind of stuff. And they're paid off. So that rental income is pure cash flow. And so if you're like me though, and you're not a handyman, rental property is not a good idea. Okay. Just say it. So that's an option. There are certain types of annuities would be an option, because those annuities are guaranteed obviously by the financial strength of those insurance companies, but we want to look at those too, because they can pay us a consistent income stream over our lifetime. The key is dedicating a specific portion of savings to creating this reliable income stream. We want that income stream to be there for you throughout your whole entire lifetime. And for a married couple, we look at that and make sure that we look at a joint life. We want to make sure that there's something there income-wise, as long as either one of you are alive. And so that's really what we look at as far as that floor of income, Stephanie.
So the foundation is in place, Philip, and the must-have expenses are covered by this income floor. So what happens with the rest of the money?
Well, that's a good question.
Do we get to go out and spend it?
So once your essentials are covered, your remaining assets can be focused on growth,
Right.
to combat inflation. So it funds the like to have life, travel, the golf membership, the college fund for the grandkids, leaving a legacy. doing the things, taking a big family vacation, all those type of things is really what is funded by that growth part of the bucket. When markets fall, you might have to cut back on your like to have expenses, but you know that floor money's coming in. It's going to cover the must have expenses. If built properly, there's no need to worry about the must haves because they're going to be covered by that floor. Again, Stephanie, that's why I created the core retirement design. It all comes down to planning. And unfortunately, not enough people have a plan in place. As a matter of fact, statistically, we know that less than 30% of the folks listening right now have a retirement income plan in place. I don't want that to happen to you. One of my goals is to help folks in Central Florida have a plan and to have a plan in place. Give us a call. Let us help you get started on that process. 863-877-1188. That's 863-877-1188. Or you can also go to our website at statlerfinancial.com and click the link there to schedule a time.
So for somebody listening right now who realizes they have a pile of accounts, but no real blueprint, no income floor, no structure, how do you walk them through building this kind of plan?
Well, there's a few things we look at, and because Social Security is so different for everybody, a single person is definitely going to be different than a married couple. Everything is designed individually for them. And so there's some key aspects we need, right? We need some information. And we gather and glean as much as we can. Not what your number is, but your benefit amounts, right? What is your benefit going to be at 62? What would your benefit be at 67? Which for most people listening out there today, that's going to be your full retirement age. And then what would your benefit be at age 70? We have software that can calculate the benefit in between, and it's pretty accurate. And so if we have those three numbers, so that's number one. Number two, are you going to get a pension? If you are, what does that number look like? And that really does come into play for some folks out there that are government employees, teachers, firefighters, police, that type of, they may have a pension. May not, but they may have a pension. So we need that number. And to also look to see what we've got coming in. What's your 401k? How much do we have there? How much do you have in other retirement accounts, IRAs, Roth IRAs? What do you have in savings outside retirement assets? Do you have rental property? All these things come into play. Do you own other property that maybe you're going to sell or you plan on downsizing when you do retire? All these things come into play when we start putting together that blueprint or that retirement income plan of how much income am I going to have when it comes to retirement. And so it's a process to gather all that. And I know it's not fun. It's a pain in the butt sometimes to have to do that, Stephanie, but it is, it's what we need to really put together a plan that says, here's where I am. Here's what I need. And this is how I'm going to create my plan. And then the other thing we have, and nobody likes to do this part either, is we talked about that the must-have expenses and the like-to-have expenses. So we need that list. We need a budget, right? Because we got to know how much we need to fill the gaps. What is the gap going to be? Do I have a gap? And if I do, how am I going to fill it? And so that's where we need all this other information. So that's kind of what we do to walk through that process. I know it's kind of a long way around to talk about it, but so most everything people have is in pre-tax money. And so we need to work on converting it. How are we going to convert it? What strategies are out there? Do I want to do it down and dirty, quick and painful, or do I want to spread it out over 8 or 10 years? All of that is doable. And you just have to walk through the process and lay out a plan to make sure it's going to work. To get started, it's simple, Stephanie. It's a 30-minute phone call. Give us a call at 863-877-1188. That's 863-877-1188.
And I love all of that. You said you took a long way around there, but you know what? You're going to do it right. And that's what the folks want to walk into when they walk into your office. They want somebody who will do it right. Call 863-877-1188. Get a hold of Philip Statler and his team at Statler Financial. That number again, 863-877-1188. And the Statler Financial Radio Show will be right back.
Many people don't plan for long-term care until they have to. But long-term care isn't just nursing homes. It can include in-home care, assisted living, or ongoing support over time, and those costs often aren't covered by Medicare. That's why Statler Financial Services helps clients plan ahead, looking at how long-term care fits into a broader retirement strategy. Planning ahead is not about expecting the worst. It's about understanding your options. Call Philip Statler at Statler Financial Services today at 863-877-1188. Philip and his team offer guidance to clarify your choices and cost before you need to act, no matter what life brings. Now is the time to learn more. Call Statler Financial at 863-877-1188, or you can text VISIT to 863-877-1188.
Advisory services offered through Second Half Financial Partners, LLC, a SEC registered investment advisor.
Welcome back. It's the Statler Financial Radio Show with founder and president Philip Statler. I'm Stephanie Griffin, and each week we get questions from you, the listener, and we use them in our mailbag segments. All kinds of questions today, Philip. Okay, are you ready for the first question?
I think so. Give it to me.
Okay. All right. Mary from Lake Placid asked, my husband and I will retire around the same time, and we are considering moving abroad. How might that impact our savings and pensions?
Man, that is a question I've not had to deal with much, but I can shed a little light there. It should not have any impact on your pensions. I think a lot of times you do need to make sure you have a U.S. bank, which means you have to have a U.S. address for those type of things. But it shouldn't impact any of those things. You may have to use different types of investment accounts if you're living abroad. The typical accounts that we use Schwab as our custodian. And so there's certain things that we don't have access to if you're not a resident of the United States. So it could be a little bit harder in that respect. But I know that sometimes it's great to live abroad, right? Sometimes it's cheaper to live abroad than it is here in the United States. So I probably haven't answered your question appropriately, but it is one of those things that is not something we deal with very often. But you definitely would need to dive in and do some research there to figure out what other things might be impediments to making that work for you.
And we can go visit them, right? We can go.
That's right. Yeah, we'll go
visit them and visit abroad. All right. You are listening to the Statler Financial Show. Jeff from Sebring wants to know, I know that the government tends to spend a lot of money, but I'm not sure.
Really?
I know. I don't know what he's talking about. Jeez, but I'm not sure how it impacts me. How can I educate myself on ways to help protect my wealth? It's a good question.
It is. How do we know it impacts you? I'm going to tell you where it impacts you is in taxes, right? Because the government's got to get their money they're spending from somebody, and it's you and me that they get it from. So one of the things that you can do is start to position yourself into Roth IRAs instead of traditional IRAs. So there's a thing called Roth conversion, which is a taxable event. And it has So it could have several different types of consequences, not just tax, but Medicare related as well. So you need to have full disclosure before you do any of these things, and make sure you run the numbers, have somebody that's qualified run the numbers so that you can look at all these different thresholds that you can't go over before it starts to cost you money. So Roth conversions are a big deal. And if you can stay in the same tax bracket you're currently in and do Roth conversions, I would do those all day long, because tax rates, we know we've got until I think probably 2030, 2029, 2030 before we don't know what's going to happen with tax rates, right? We know that we've got them low for now. So while they're low, we need to go and seek about Roth conversions, do the planning, look at it and see if it's right for you and if it's going to benefit you from the long term.
All right. Mark from Avon Park wants to know, I've worked hard all my life. How can I help ensure my retirement years are as fulfilling and enjoyable as possible without having to worry about finances? That is the last thing you want to do when you retire, is worry about your money. You want to be able to go out and enjoy it, don't you?
You do. You'd be surprised, though. I get some guys in here that they like spending the first couple hours of their day in the market trading. You know, it's crazy. I mean, if I retired, I'd want to put all that behind me. But it is. So, you know, having a plan, basically, Mark, that's the bottom line. We need to have a plan in place. And if you have a plan in place, that's going to help you get you to where you need to be. That plan gives you that track to run on. And then, yes, you still have to look at your finances. You still have to be cognizant of what's happening around you and how it's affecting your current accounts. But I think that it's very doable at that point, as long as you have a plan in place. And then you review that plan with your advisor at least once a year to make sure you're on track to keep going the way you're going.
And if you'd like to talk to Philip, you can do that by calling that number 863-877-1188. That number again is 863-877-1188. You can text the word visit to that same number, get in for your free consultation, and talk to Philip at Statler Financial Services. Alex, he writes a pretty big question. He's from Cypress Gardens. My dad worked at the same job for 30 years before he retired with a pension, and it just seems like he's never had to worry much about money. I've worked for 3 different companies, but I've always made sure to contribute to the company 401k with each position. I'm realizing that I should do something with those different accounts. There's a good amount of each of those accounts, but I don't know how to consolidate the money or if that would even be the best thing to do for me. I'd sure love to enjoy retirement one day, just like my dad. What advice do you have for him, Philip?
So, you know, here's the thing is that, folks like your dad who could retire with a pension, it just doesn't happen as much anymore, right? The private sector has kind of gone away from pensions and they developed the 401k. And so now you're going to be responsible for creating your own pension. And there's different ways that we can do that. But it's easy to consolidate these into an IRA. Your accounts that are out there, people usually don't leave them at the 401k. They usually end up rolling to an IRA so they have more control and better options for their investments from that standpoint. So how can you create some income? Well, I've said in different shows that there's a couple different ways you can create income. You could have a portfolio of dividend paying stocks, but it's still, you're relying on those companies to pay that dividend every single quarter. And it can, cash flow may not always be even. Because of that, they pay quarterly. Another area that you may want to look at is annuities. Now, annuities aren't for everybody, but they are a contract between you and an insurance company. that helps provide income. They will provide a lifetime of income for you. And if you do them right, you can do a joint so that it's going to provide that same income as long as either you or your spouse are alive. So there's some things you can do to help create your own pension. And those are some areas that we do look at within our core retirement design, where we're kind of designing the income planning part of it. We can look at some of those options to see if they make sense for folks. Sometimes they do, sometimes they don't. It just doesn't add up and doesn't make it worth the effort to do those. So, but we look at those as an option to see if they may work for you. So that's just an area that we look at. Again, our core retirement design, as we kind of close out the show today, is really that. We look at the risk. And in today's show, we've talked a lot about risk. Taxes, folks, taxes are a risk to your retirement income because you have a partner, Uncle Sam. Every time you take money out of that retirement account, he's got his hand there. He wants his share. The problem is you don't know what his share is going to be because you don't know what the tax rate is 15 years from now. So we want to get everything as tax-free as possible. And then having that income plan really just gives you a track to run on, gives you a plan in place that you can adjust, but it gives you something to look at every year and see, am I on track? Am I getting to where I need to be? And that way, your money's going to last as long as you need it to. Those are the areas you need to look at. That's why I developed the core retirement design. I'd love to talk to you about it. See if you are on the right track to the retirement you always dreamed of. It's a simple phone call, 863-877-1188. That's 863-877-1188. Give me a call and let's chat, see what we can do to make sure you're on the track you need to be on.
Philip, it was so great to talk to you again this week.
Hey, good to talk to you, Stephanie. You have a great one, and we will talk to you next week.
Sounds good. Talk to you next week on the Statler Financial Radio Show.
Advisory services offered through Second Half Financial Partners, LLC, a SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine what investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. This radio show is a paid placement.
Who likes uncertainty? Wall Street certainly doesn't. With fears of a potential recession and partisan politics, there's a lot of uncertainty right now. What will your future look like? Will your taxes go up? Will your savings go down? Here in the Sebring area, financial advisor Philip Statler and the team at Statler Financial Services have seen uncertainty come and go. Philip can help you create a plan designed to preserve your finances in uncertain times. And it's not a matter of if those uncertain times will show up, but when. Call 863-877-1188 now to meet with Philip Statler and the team at Statler Financial Services. Call 863-877-1188 and schedule your visit today. 863-877-1188. Advisory services offered through Second Half Financial Partners, LLC, a SEC-registered investment advisor. Investing involves risk, including the potential loss of principal.